Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, June 10th, and tomorrow we'll be getting the big CPI report here in the US, although it's not really so big anymore. It seems like the market has completely moved on for it, at least now. And the reason why I say that is because expectations are for CPI to start increasing again as we move to the second half of the year. So this may actually turn out to be the final soft print, so to speak, that we get, at least when we get the May numbers tomorrow. We're looking for a not-so-soft core CPI to rise by 0.3%, hotter than last month. Core CPI year-over-year expected to rise by 2.9%, stronger than last month's 2.8%. Headlines expected to rise by 0.2%, in line with last month. And year-over-year expected to rise by 2.5%, hotter than last month. So based on these data points, it's looking like, inflation's expected to be a little bit hotter than it was previously. Then I think something to pay attention to in the 1 o'clock time slot tomorrow will be the 10-year auction. This is going to be important just because there's been some, focus on rates more recently. We saw the 3-year auction have a little bit of a tail today. And then on Thursday, you're going to be getting PPI and continuing jobless claims. And then on Friday, we'll be getting the initial reading of University of Michigan. And so, again, this is mostly inflation price data. For the most part, I think the market probably looks through a lot of this. I would think that the only thing that could really upset the apple cart, maybe some data in this PPI report that should come on Thursday, could be a little bit hotter given some of the data points we've been seeing from some of the Fed surveys and ISM surveys and PMI data points. So something to keep an eye on probably more is the PPI report and that 10-year auction tomorrow. Otherwise, when we just start off and take a look, the euro's been generally trending higher. We've been talking about the euro for some time, but at this point, we're just now waiting for some sort of breakout and a move up above the 114.70 area. I mean, clearly, if you get a soft CPI report tomorrow, you get a soft PPI data point, that could certainly be what's needed to propel the euro higher. Generally speaking, though, this is a pretty important range given how it's acted as a really strong resistance in the past and more recently. So, again, you get above 114.70. There's some ample room to run here, probably up to, probably all the way up to about 117 or maybe even as high as 119. Momentum is still favored to the upside. Again, you have what looks like an ascending triangle here. So bullish pattern, bullish formation, some resistance levels that keep getting tested. Seems to still favor potential upside for the euro. The pound, the story is starting to look a little bit different because we haven't really had any follow through since last week. You can see that the RSI is starting to constrict, and it's sort of getting, you're getting lower highs and higher lows. So we're tightening up. Here's your uptrend that's clearly starting to show signs of breaking. I think for confirmation, you need to see a break below 134 or so. That would obviously set up a drop back to 131. It's just looking like the pound is losing some steam. And of course, there was that poor job report that came out on Tuesday. The Japanese yen is also showing some signs of weakening again. We've moved back to the upper end of the trading range at 148.87. Clearly the pattern has broken. It's been tested a couple of times. We were starting to trend lower again, and then we broke back out to the upside. So when you look at the yen, you can look and see the RSI is clearly trending in a higher direction. And that kind of has to give you a reason to think that maybe the yen is going to retrace back up towards this 148 area. You can even see that these highs are getting higher. So again, it looks like if you can get above this 145 to 145.5 area, you could potentially go to 148 on the yen. But as long as you stay below 145, 145.5, you have to think that there's an opportunity for us to go lower again. It looks like right now we're just waiting for some sort of signal or some sort of break. And until you really get that confirmation, I think you have to be in a place that you could play it from both sides. Gold is also really doing a whole bunch of nothing for us recently, really just trading sideways. I mean, you can make an argument and say, well, maybe there's a symmetrical triangle forming here. If there is a symmetrical triangle forming, you can see we've already broken to the downside, and you've really had 2 days, 3 days now where you've been outside of that range. Momentum looked like it was starting to pick up, and now it's starting to move lower again. So this is, again, a very confusing time for gold, because when you look at it, there were opportunities for it to break down. Clearly, there was what looked like a head and shoulder, a double top pattern that didn't play out. Then it looked like we were starting to reestablish an uptrend. That hasn't played out yet. So it looks like we're just continuing to consolidate. I think from this standpoint, obviously, if you break below 3,300, we're probably going to get an opportunity to revisit the lows. Just like if you get above 3,380, you're likely going to revisit the highs. And until you get some sort of something to settle or something more concrete, I think you're just playing a guessing game in terms of which way gold is going. But you could also make an argument that we're really just starting to form some sort of top pattern, and we're just really getting ready to roll over. Same can be said for oil, but in more of a bullish way, with potentially setting up a chance to go higher. You can almost make an argument that you have, what looks like the start of a head and shoulders pattern. But really for oil, it's all about getting above 66. We know this was a very important level when oil was really holding there and not breaking down. And when it did break down, that was a big deal. So, but when you look at this pattern, not unusual to see it kind of just come right back up to, and very quickly, to where we were prior to it in March. So again, I still tend to think that oil is moving higher. You can see the RSI broke the long-term downtrend. You can also see that it is now starting to rise, going higher. So momentum seems to favor gold going up at this point, and momentum seems to favor oil rising at this point, and I think getting back to 72 is a distinct possibility. So when we look at the DAX, we were talking about this potential rising megaphone pattern, and it actually is starting to play out. You can see we've actually been down 3 days in a row. RSI continues to roll over. So, for right now, this is all preliminary. We can obviously snap right back up and start moving higher again. You can see we actually closed below the 10-day exponential moving average, something that hasn't happened very often. There is obviously room for us to continue to decline before hitting the lower band at 23,550. You can also see the 20-day moving average is serving as support. So there's a lot of support in this area before we get too excited about the DAX really moving sharply lower to potentially hold it up. And so again, but this is obviously a big deal, I think, and a big break. I think if we were to break 23,750, that's going to probably open the door to lower levels and a test of this 23,400. But again, this is preliminary, and it looks like, but it does look like there could be something happening here on the DAX that could be evolving into something deeper on the downside. The FTSE continued to just grind higher. I think it's pretty clear. It continues to be the case that this is your trend line. As long as you stay above that trend line, it's your friend. You're going to continue to grind higher, or probably make new highs. Again, you probably have, some room to continue to grind and rise right up along this upper Bollinger Band. But, this trend line is really the big key here, because if this breaks, then you're talking about, if you break below 8,800, you're talking about going back to 8,700, and then you're talking about going back to 8,500. But for now, the trend is your friend. And as long as you stay above that trend line, you stay above that 10-day exponential moving average, it's really kind of hard to be too negative on this. I guess if you want to try to, as we're going to see when we talk about in the U.S. indices, if you kind of, again, draw this out, you could start making a case that maybe there's a little bit of a rising wedge forming here. It's not a solid pattern. You'll see the U.S. indices have it a little more pronounced, but that's also a possibility here as well. Here you can see it in the NASDAQ. It's much more defined, I think. You have, 3 different points where it's touching, 2-3 different points on the lower side where it's touching. It just seems to me like we're compressing. We're getting tighter here. You can see it in the NASDAQ futures as well. And what's interesting also is that you have that classic, slowing of the volume, declining volume profile that goes with it. So, again, a rising wedge is a negative, is a bearish reversal pattern. About 60% of the times they will trade lower. That obviously means that 40% of the time they can trade higher. So, you could take your pick, but the odds do favor it moving down. Another option is that, you just trade sideways and consolidate sideways. Again, when you look at the cash market, it's same thing. You're at the upper Bollinger Band, RSI 69.5. So we're kind of at that overbought area again, where you would expect to see some sort of consolidation play out here, whether it be sideways or lower. You can also see that the 10-day exponential moving average isn't that far below us at this point. So there's a lot of pieces here coming together to suggest that we could really be seeing some sort of topping in the NASDAQ taking place. This is also obviously a major area of resistance right near the old highs. So this seems certainly like a viable candidate and a viable place to see a reversal of trend. When you look at the S&P, it's a very similar look. Here's your rising wedge pattern. If you look at it on the futures, I have a little bit messier here, but more importantly is that you've when you look at the futures, what you can also see is that, again, volumes have generally been declining, but you can also see the same, technical triangle that we have playing out. When you look at the Dow, that's broken above this area of resistance, or at least it's very close to that happening. If you get really kind of, to granular with it, you could make a case that maybe the resistance is like up here. But at any rate, you're still very close to something really breaking out from the Dow, at least. You can also see, though, that there's just not a lot of room above it with the upper Bollinger Band. The RSI, though, is sort of in the middle. You're not really getting any definitive price action there. So right now, I think you're just waiting to find out whether or not the Dow can actually break out. You can see we're actually very close to the 200-day moving average. So in a lot of ways, unless you get above 42,900, call it, you got to be wary of the downside. But above 43,000, you go right back to, there's no reason why you couldn't see the Dow rally 1,000 points and move up to around 44,000 or so. So that's all we're going to have for today. Hope you found this helpful, and we'll see you next week. Bye.